So what if I told you Canada isn't facing a housing shortage? We're watching the home building industry get systematically dismantled. And the builders, they're scared. The projects are drying up. Workers are being laid off by the thousands. And when you start looking at the data, we start seeing a pattern emerge. And it's not what you've been told. I'm Claudia Ragona, one of the Ragona sisters, and today we're diving into why home building in Canada is slowing to a crawl. Who's behind it and what it means for you. Stick around because later I'm going to show you the numbers that developers are terrified to talk about. Okay, so I just read this article from the Canadian Real Estate Magazine, and I really need to share it with you because the data inside is wild. They broke down the year-over-year construction trends in our biggest cities, and the chart they included, it completely paints a clearer picture of what we're all feeling and seeing. So before we dig into the pain, here's the scale of the shift. 102,000 purpose-built rental units are underway across Canada, and that's almost equal to the total number of new condos and single-family homes combined. So what we're seeing isn't just a tilt, it's a full-blown pivot in what's being built and who it's being built for. So let's break this down city by city. In Toronto, single-family home construction is down 14.5%. Condos are down 14.7%, but rentals, they're up by 14.8%. Vancouver's right there too. Single-family builds are down 12.8%. Condos are down 5.8%, but rental units are still growing. Look at Calgary, same pattern. Ownership builds are down, but rental construction is up over 40%. And Edmonton, rental units are up over 41%. Ownership is climbing a bit, but nothing close to rental. So clearly, this isn't some random fluctuation. It's a major shift. Take Alberta, for example. In both Calgary and Edmonton, it's rental projects that are keeping the construction industry moving. The ownership segment, it's almost flatlining. Why? Because investors are chasing steady returns and not risk. That means no condos unless they're guaranteed to sell, no homes unless they're guaranteed to appraise. Meanwhile, in places like Ontario and British Columbia, the squeeze is worse. Land is expensive. Approvals are slow and costs are high, so ownership projects are the first to die. Oh, that actually rhymes. And when you really think about it, this tells us who our cities are being built for and who's being priced out or pushed aside. Now, I want to see how the actual builders are feeling about all this. So after reading the article, I went straight into the Canadian Home Builders Association. They have this thing called the Housing Market Index. And let me tell you, the mood among builders right now is pretty grim. Look at this chart. It asks builders, how impactful are current mortgage rates and qualification rules? 71% said it's hurting their sales. Only 11% said it's not affecting them at all. So when you hear the government say, oh, buyers are just waiting for rates to fall, yeah, that's not really it. People literally can't qualify. That's it. And builders know it. So they need to stop sugarcoating this. Now, if you look at this poll, it asks builders, what's your level of concern for your business over the next year? 87% said they're concerned, and 1 in 5 said they're extremely concerned. That's not normal. That's builders looking at their balance sheets and asking, should we even keep going? Here's another one. 35% of builders have laid off workers, and most of them said they don't plan to rehire anytime soon. And that's way up from just a year ago. So yeah, the slowdown is real, and it's not just interest rates. The whole structure of the market is changing because the incentives, they're not pointing to home ownership anymore. They're pointing straight into rentals. Look at the trend across cities in Toronto, Edmonton, Halifax, and the majority of the new apartment construction is now rentals. It's not condos, not home ownership units, just Rentals. Why? Because they're easier to finance, especially when you've got big institutions backing you, pension funds, REITs, a private equity. They want guaranteed yield, not unsold inventory. So the rentals check that box. And here's the twist. These projects, they're not being built by the people who live in the neighborhood. They're being backrolled by massive corporate players and foreign investors. And they're not in it to build communities. They're in it for returns. And those returns, they're driving the size of projects too, now favoring smaller apartment buildings because it's quicker, cheaper, and easier to fill. And what does that mean? It means we're building more rentals faster, but fewer homes people can actually buy. And that's where this starts to hit hard, because if you're trying to get ahead in life and if you want to build equity or pass something down, a rental unit won't cut it. So let's go back to what the builders are saying. 56% say the GST rebate program isn't helping. It's capped at homes under $1 million. And guess what? That barely gets you anything in most cities, especially in cities like Toronto and Vancouver. 45% say that even the new federal policy changes haven't helped sales at all. And 28% say tariffs are making it harder to price homes and plan ahead. That kind of volatility, it kills projects before they even start. And here's a number that really puts things into perspective. It now costs over $65,000 more to build a 2,400 square foot home than it did in early 2020. And that's not even including land, fees, or interest. So yeah, it's expensive, but more importantly, it's so unpredictable. Builders can't plan, and when they can't plan, obviously they don't build. Now let's talk about where this might be going next. Factory built homes, the kind of build off site and assemble on location, are gaining traction. Right now, 26% of builders are already using them, and over half say they're looking into it. And here's a question we should be asking. Who's shaping this shift? Wasn't it Mark Carney, former Bank of Canada guy involved with Brookfield? And doesn't Brookfield have a massive stake in modular housing? Hey, I'm just saying, follow the money, they say. Also, 62% of builders say pricing homes right now is a freaking nightmare. Tariffs, delays, supply issues. It's like trying to hit a moving target with a blindfold on. So what do you do when you can't predict anything? We pull back. You pull back. Or you go where the money's safer. And for them, that's rentals. And here's the part we haven't talked about yet. Demand is starting to change too. Immigration policy shifts are slowing down the number of non-permanent residents. And that is huge because international students and temporary workers are a big part of who rents these units. If that demand dries up, we could end up with way more rentals than we need. And that's going to hit hard in cities like Vancouver and Halifax. Calgary, by the way, is still leading in the new housing starts per capita, but Toronto, it's near the bottom, lowest we've seen in years. That's wild when you think about how big and important Toronto is. In Ontario and BC, they're seeing record low building permits. That means the pipeline is drying up because fewer homes in the pipeline today means even fewer resale options tomorrow. So what do you take from all this? Well, builders are warning us and no one's listening. Policy is pushing rentals, not homes. Corporate investors are reshaping the market and ownership is becoming rare. At the same time, demand is shifting and we've got more supply coming online, but fewer renters to fill up in some cities. This isn't a soft landing. This is literally a reset. So what should you do? If you're a renter, pay attention to who owns your building because the big guys, they're not always thinking about your long-term comfort. If you're an investor, think long-term. Flipping might be dead, but rental income is still real. And if you're trying to buy, don't give up, but you need to get strategic because home ownership opportunities are shrinking. And if this helped connect some dots for you, don't forget to subscribe. Before we wrap, I just want to say this, and maybe it's a little emotional, but it needs to be said. It's so sad that Canada's housing landscape has changed so drastically in just the last 10 years. The builders who once had a passion for designing homes for families, like real homes with big kitchens and living rooms made for Sunday dinners and holiday gatherings, are now starting to disappear. What we're getting instead are these micro unit shoe boxes, design that barely fit a couch, let alone a family. It's like the government is deliberately squeezing out the spaces where people connect, where they come together under one roof. I know that might sound like over the top, but think about that. How is a family living in 300 square feet supposed to host Thanksgiving dinner or have their grandparents over for Christmas? Like, really, how? And it's not just about square footage. It's about what we're being told to accept, what we're being told to give up. And I don't think we should be silent about it. I'm sorry. I don't know. I'm just saying, I can be the only one who sees what's really happening in Canadian real estate, but I doubt that. And anyways, that's all for now. See you in the next one.